Alrighty, good afternoon, ladies and gents. Welcome to this mentor trade review. We're going to have a look at oil today. There's been some risk off flows across the market. It's opened up an opportunity to have been short oil through the course of the day. We're going to break that down, have a look how and why that opportunity shaped up. And really, it all starts from some of the overnight news, and that was macro driven. It was the exports data out of China. We can just see down here on the left hand side, previous figure of negative 12.5%, and there was a contraction down to negative 14.5%. So that China trade slump just threatening recovery prospects. And that's also going in line with Moody's, who have downgraded some of the small to mid-sized banks. Please do catch up with Mark in one of his European update videos, which you'll find across our social media platforms, where he will break down the implications of that Moody's downgrade further. But ultimately, it's prompting some risk off flows within the market. Now, what will be interesting with this is oil has seen a corrective move here, but of course, oil has been on a particularly positive run through all of July, and that's partly driven by crude stocks being down, oil rig counts being down, and the spreads between Brent and crude have been widening out as well, just suggesting that there should be some further upside in crude, and that's still the case. Spreads still widening, stocks still moving lower, and oil rig count also down as well. So certainly a reduction in supply. So it'll be interesting to see if this short holds or if we see some further upside. Here in oil was certainly the case for today, off the back of that Chinese data, was for opportunities for short. So let's come across to the charts now. We'll just have a look at market profiles here. And really, the opportunity started from probably this sort of balanced day in here, I guess. Really, we had this balanced day, which suggests sort of an accumulation of positioning. And in that balanced day, we struggled to establish any value at a higher price. We traded with inside. This is last Tuesday. This traded with inside Monday's value area. We then saw a pretty substantial shift lower, and we sort of had a very thin area of trade down through here, really from that 81.50 down to the $80 a barrel mark, put in a little bit of volume, and then following on from that, we created another thin day. Now that thin day is generally a lack of acceptance of price, and the market likely to want to trade back down through that thin profile at some point in time, and then we started to establish a bit of balance up here at the top. We had a B shape, and this is coming back to last Friday. We had a B shape which left some poor lows and excess at the highs with that point of control. Just trading back just with inside the high of the previous day. So just suggesting we didn't particularly like trading up above this sort of $81, $82 a barrel mark. Following on from that, yesterday we had a very, very balanced day, nice D shape again, an accumulation of positions, the point of control with inside the value area from that previous day, and again, just a failure to break up through. You can see the volume profile for last week, a failure to put in a new high above Friday's high from last week. So again, a lack of acceptance really here of higher prices, and this balanced day is just suggesting an accumulation and therefore perhaps teeing up the opportunity for a move back down through this thin day, which is certainly what we have seen unfold today. The opening price here, this orange line, we saw the opening price today just open up with inside yesterday's value, and then it's been really a capitulation from there on out, really. Now, where we've eventually found support is just having a run down towards the previous value area from last Wednesday, and then this little cave, this little dip in volume from last Thursday, and it's also now just come in, and we're just in the process now really of filling out this low volume node, this cave from last week's profile, and we're back sort of finding support in and where from sort of 2 weeks previous we had established a fair amount of value in and around that 79.50 up to $80 a barrel marker. Okay, now prior to this move lower today, of course, those balanced days and those poor lows, opportunities to go and attack. We also, on the thin profile, which we've established back here last Thursday, we also left a series of poor lows down here also. So certainly that teed up the opportunity for some shorts. Now, if we bring in our candlestick chart and just looking here at an hourly chart, we had a beautiful price pattern formation trading up here at the highs, and that was in the form of an head and shoulders, and we'll just have a look here, the neckline of that head and shoulders, perfectly really at 81.50, so reasonably nice handle there, psychological handle, to be broken, and that's the move. So we had the left shoulder, the head, the right shoulder, clean down through that 81.50, and we just made our way down. So I would say where that little low volume area was, down towards $80 a barrel, and it's that $80 a barrel, that psychological round number, which you can also see has been previous resistance, and then a little kiss of support on the way back through, and that was back on the 3rd of August, so a previously respected level. So it's been a nice corrective move. It's been a nice retracement back down towards into that $80 a barrel mark, with technicals, fundamentals, profiles and candlestick charts all coming into play. If there was any doubt of completion or opportunity for this head and shoulders, that was all put to rest really. We had this strong bearish Maribozu breaking down through the neckline, closing right at the low, so clear intent and direction as we came through the neckline, and then it was a little kiss of the neckline and down towards, like we said, that $80 a barrel marker. Very interesting now to see where this goes. Of course, the major trend here within oil firmly still to the upside. You know, this has been a nice healthy little pressure release, but ultimately this trend right the way back from the tail end of June, start of July, has been nothing but positive. And as we said, those fundamentals, with spread still widening, inventory still coming down, perhaps there's opportunity for this to move back to the top side. And of course, it was an enormous miss on inventories. Um, the last inventories report was a miss of 17.5 million barrels, which should ultimately have driven positivity in oil. We actually saw a particularly negative reaction, but that very quickly within the next day, the next the next European session, we retraced all the way back through that and went and put in new highs. So those oil inventories still coming down. That slowdown, that slump in demand from China, of course, supporting this short position, but will the longer term trend here prevail? Time will tell. As it sits right now, we are lacking any clear signals or intent to want to get long. We'll have to wait and see how this profile closes out. We'll have a look back perhaps in the coming days and weeks to see if there's opportunities to get long again. But right now, it is risk off flows across the board. Okay, that is all from me for oil today. Well done if you saw that opportunity and you traded. If not, be patient. There'll be plenty more opportunities just around the corner. Tune in for another mental trade review from us. That's all from me. Bye for now.